just delays. There are no penalties or anything for late filing with the state of Tennessee, but there would have been very steep penalties for filing late with HUD. So all of that got done. Again, read through the MD&A if you haven't already. We made no changes to that. It's exactly what you've already seen. But Jim did have to add a lot from what we've had in the past because of the business type activity of the John Sevier Center. Okay, if you can scroll on to the financial statements themselves, the very first one is your net position. And if you've been on the board in the past and you've seen the financial statements in the past, you will know that that statement of net position only had governmental funds. Okay, so as you can see there, now we have governmental activities, which include the general fund and the TIF. We have business type activities, which are the John Sevier Center. And then the Downtown Foundation has always been presented as a separate component unit of the JCDA. They do file their own 990. They are formed as a separate, legally separate, not-for-profit organization. The JCDA does not file a 990, is not required to file one because they were formed under a private act from the state of Tennessee. So they do not have to comply with not-for-profit requirements. If you will look on down on this page, the net investment in capital assets is the value of your assets that there's debt against. So for the general fund, you have the Northeast State property, and the value of it is included in the capital assets that are being depreciated, that $1,509,000, and less the amount of debt, and it's just the debt on that facility. So there is a net investment in capital assets of $298,000. If you look on the business type activities, that's actually a negative number because there's more debt than the value of the facility by that amount. You can see the facility itself was the $4,332,000, but the debt is the total of that $574 and the $4,025,000. The other thing that I would point out on that page, maybe just quickly, is in the interfund receivables. It's line 4 down under the assets, $148,404. This is money that the bulk of it is $100,000 that initially the general fund paid out to start the process to get the John Sevier Center. The $48,000 are additional expenses that were paid through the general fund for the John Sevier Center. And so at some point in time, the state will want to see how you're going to address that. I don't think they will make a big deal out of it this year, but I do know that that's probably something we'll need some more note disclosures on in the future as you all work through what your plans are for the John Sevier Center. All right, if you'll scroll on through it, the next one is, of course, your statement of activities. Again, it looks very similar to in the past, except that you will see about the middle of the page on the left, the business type activities have now been added. And so you see the total of expenses and charges for services for the John Sevier Center. When it was first set up, since no one really knew what all was going to be required at that time, even this initially in September had been recorded to where these revenues and expenses were all just included in total, pretty much like you're seeing here. However, to comply with HUD, we had to get the breakdown that you'll see here in a few minutes. So if you'll scroll on through that, the governmental funds, again, very similar to in the past, no major changes in the presentation or actually in the level of activity there. There was some decrease in activity, of course, in the events that you were able to hold because of COVID. So there's some changes there, but a lot of the other information is pretty similar. So if you'll scroll on through, I want to spend a little more time just addressing the Again, these are the reconciliations. If you all have not been on the board before or do not serve on a board that has governmental funds, you may not have seen the reconciliations before, but if you will scroll back one, I think right here, because your governmental funds at the fund level report what's called a modified cash basis, they do not record all of the fixed assets and all the long-term liability. At the government-wide level, which is what we just looked at, that statement of net position, they do. And so this is a reconciliation between a modified cash basis and a full accrual basis. All right, if you'll go on to the next one, which is, again, at the fund level now, what you usually see, these fund level statements are what you usually see in your monthly packets. They're how you budget. They're how you make decisions. Modified cash makes more sense for most of what you do on a day-to-day basis in knowing how to operate. And then there's a reconciliation after this one that tells how you get from the statement of revenues at the fund level back to the government. Well, it starts with the governmental activities in the statement of activities, but then drilling back down to what it would be at the fund level. And these differences are primarily any long-term receivables or the long-term debt, or again, the depreciation on the assets that you hold. Okay, if you'll scroll on through, again, these individual funds, general fund and TIF fund, you've seen pretty much in the past. We do have a prior period adjustment for the $100,000 because it was expensed in the 2019 year in the general fund, and now with the John Sevier Center purchased and operating, that becomes part of the John Sevier Center, and so that adjustment was made, and that was part of that due to that we looked at earlier. Okay, if you'll go on through. I think because these are pretty straightforward and we didn't have shortfalls in those, we'll look at the proprietary fund, which is your John Sevier Center. As you can see here, you have several different cash accounts, two of which are restricted in the middle of the page there. These are very specifically addressed not only by HUD, but also in your loan agreements on how those are to be maintained. HUD does require a cash restriction for reserve for repairs and maintenance. The loan agreement also wants part of that reserve to pay interest. The cash restricted for security deposits typically would match what those security deposits were. You can see they're a little bit different just for the timing of when money got put in the bank. Or when it got transferred back between the two bank accounts. So actually at year end, you had $31,931 in the cash restricted for security deposits, but those deposits payable were actually $32,000. Very slight difference, and again, just a timing issue. We did also have to record all of the value of the land and the building and improvements and take depreciation on those. None of that had been done, but is required in the enterprise fund and is required for the HUD filing. Also, the long-term debt was recorded and the current portion of that debt was pulled out to be shown in current liabilities. All right, we've already talked about that net investment being negative, so let's look at how your operating revenues and expenses are going to look going forward. Initially, when it was set up in September, as I said, it was just set up as John Sevier revenues and John Sevier expenses. And so there was considerable time needed in pulling these back out. Fortunately, M&M Properties had maintained these to where we were able to go back and reconcile between their records and get these allocated back out. This type of format and this type of descriptions are very similar to what you see on the HUD REACT report. Theirs is actually a little bit more detailed. If you go into utilities expenses, they're going to want to see a little more breakdown. Same is true of some of the administrative and operating, but they're within these categories in the REACT report. And so It's very important that we continue to maintain the detail that we will have for the REACT report. So your QuickBooks report will actually have even a few more levels. They'll have additional breakdowns under administrative and under utilities and under operating. So this meant a lot more detail than what you were used to having to have within your governmental fund. Okay, if you'll go on through, another difference for an enterprise fund is a go back one. I think it just didn't quite pick it up. It should be there. Nope. All right. Well, this one is a draft. We will deal with that. I'll get that in there. I would like for you all to be able to approve it, though, so that we could get Jim to re-sign a representation letter dated today, and we can get this finalized back to the state, if that would be acceptable. There is a cash flow statement.
We do have that. That page is in the hard copy that has been delivered to the board. So.
Okay, I'll make sure it gets back in this one. Good, thank you. It is a cash flow statement that shows where cash came from and how cash went out. That is an important part of an enterprise fund. It is not something that's ever used in a governmental fund. All right, we'll just flip on to the notes if we could then and skip through most of those. A lot of them are very similar to in the past. We have added information about enterprise funds. It does look like some of the spacing has got off with this one too, which I'll have to pull back together. As I said, I just got notice from them yesterday, and we tried to make the changes, and I've messed up some spacing. But if you scroll on down this page, it talks about governmental funds, and then on the next page, it begins to talk about the proprietary fund, which is your John Sevier Center Enterprise Fund. Capital assets we've had in there in the past, but you're going to see two levels of those as you go on through the, I think you can go on through the notes a little bit faster unless anybody has a specific question. A lot of this information has been in the reports in the past and is not a change. I wanted to focus primarily on how many changes were actually made. In the capital assets, there will be one for, and I'm not sure why these aren't coming through, one for the enterprise funds and one for the governmental funds. So hopefully you have those in your hard copy. Those did not change. I did not make any change to that. As I said, the only changes were, okay, the only changes were in the wording that I pointed out in the opinion letter and then in this statement of federal awards, which is toward the end. So lots of detail on your long-term debt. Each debt schedule is explained, and there's detailed schedules on all of those. Then the just scroll on through the rest of the notes. And you did have an ARC grant this year also, which we did mention here. But if you'll go on through, we'd already talked about the HAP assistance earlier. And then when we had done the grant schedule,
there's nothing
I don't know why that's
here.
it's not showing up. I don't understand that. Those were pulled in. Let me see. Well, the grant schedule that you have just shows the 10,000 that was from the 10,000 that was from ARC. What we've added to that statement, if this will show up. I may try to put it up here. I'm not sure why.
There we go. The supplementary, is this what you want? Karen?
Yes.
Look on the screen. Okay. It was just, I just reloaded it.
Oh, okay. All right. Well, I couldn't figure out why they all disappeared because they were, I thought I put them all in there. Okay. This is the page that is the most different, and this is the one that the state really wanted us to have in there because the HAP assistance should be recorded on the grant schedule, even though we've disclosed it throughout the report. And so it is now in the opinion letter and it is in the report. Those are the major differences. So if you want to scroll on through, you do already have debt schedules. I did rearrange those a bit, but none of the numbers changed. And then the findings letter at the end just deals with internal controls over compliance issues. We did note a few things, and Jim has already addressed all of those. We made no changes to that from the copy that you have, but if there's some of those you want to focus on, I do think that all of those have been addressed now fully, and every effort is being made to make these corrections going forward, which is why it's taken you a while to get your September and December quarterly financial statements, because after finishing the audit, we realized that financial statements on the basis that you'd been looking at them in the past was not going to be meaningful. And it was going to make more sense to go ahead and get them fixed the way they're going to look going forward. So probably the most important page here is actually to go on to where Jim has addressed the corrections that are going to be made. And these are things that he's already working toward. And those will be, I think, at the end of this, where the addressed what would, how those would be. I think maybe one more page or two. Is that letter loading?
It doesn't look like it. There we go.
Okay, here it is. Corrective action plan. Okay. These are in response to our findings. And these are things that I will say you all have already been working very hard on. And I do expect that all of those will be corrected going forward. So if you have questions, I know that's a lot to take in a short amount of time, but I'll be more than happy to try to address any questions that you have. If there aren't any, if you all would be so kind as to be willing to accept the changes that I mentioned today compared to the report you have, and to return that report to Diana and allow Jim and Diana to sign an updated representation letter dated as of today. I will make sure all the spacing issues and holes in this one are correct, and we will get it refiled with the state. They've been very gracious as well. Even her letter to her email to me yesterday saying she was rejecting it. She said, "You all made a tremendous number of changes this year. I'd hate to even ask it, but we really need these made to accept it." So there was a lot involved in all the changes that transpired.
Thank you, Karen. Do we have a motion to accept the fiscal year 1920 audit with the corrections that Karen is recommending?
I'll make the motion to approve as presented.
I'll second.
And I don't have any other questions. I just have a comment of thank you for all the hard work, both to Karen and her firm and to Jim. And I don't want the quote unquote findings to reflect poorly on Jim or Ryan during that transition. Our financials are very complex now when we're adding in more and more governmental reporting. And so these, in my opinion, are minor. We're on top of them and they will be corrected for next year. And I'm confident that we'll have a clean audit for next year.
Sounds good. I think so too. I think we just didn't all realize how much it was going to change to add the John Sevier Center. And it was pretty drastic financially.
All right. Any further discussion? We have a first and a second. Lindsay, will you do the roll call, please?
Yes, who was the second?
William,
Okay, thank you. All righty, Hank Carr,
Yes.
Shannon Castillo,
Yes.
Tracy Johnson,
Yes.
Jody Jones, Brent Long,
Yes.
Freddie Malone,
Yes.
Aaron Murphy,
Yes.
Lindsay Nichols,
Yes.
William Roller,
Yes.
Seth Thomas,
Yes.
Robert Williams,
Yes.
and Joe Wise.
Yes.
Thank you, Lindsay. Moving on to approval of financials. These were received on Thursday and emailed to you. As Karen shared with us the reasons for the delay in financials, since they needed to be recreated with the separation of entities, they are presented by quarters. We'll begin receiving monthly financials next month. Jim, will you present the financials for Q2, please?
Yes, I just have a summary report and then we can take any questions afterwards. But Karen's already explained the bulk of the operational issues. So just for the financial highlights, for the first 6 months of the fiscal year, the JCDA had revenue of $523,676, that's just for the JCDA, and that's 56% of our annual budget. For the same time period, the John Sevier had revenue of $504,295, or 49% of the annual budget. On the balance sheet for the JCDA, the cash position is currently $2,208,094. Yeah, 094. The schedule is also showing a due from John Sevier in that current asset. So if you take that out, it's $2,208,094. There is $1,402,578 in the TIF account, $287,249 in the operating account, $193,609 in the savings account, and $201,011 in the downtown center TIF fund. With the only difference there being timing on the outstanding check. In the John Sevier, there is we don't have the John Sevier up because of course they're in two separate statements, but I'm just going to compare each one. In the John Sevier, we have $112,000, $112,060 in the John Sevier reserve account, $73,009 in the John Sevier rental account, and $32,606 in the John Sevier security account. Looking at the current liabilities on page 3 of both of the reports, there is $629 in current liabilities for the JCDA and $864,262 in current liabilities for the John Sevier Center. These large amount of John Sevier current liabilities are related to the debt on the building and the amounts due that you saw in the other due to other funds of $458,000, which is due to the JCDA as part of the new accounting. The total fund balances for the JCDA, or the total fund balance for the JCDA is $2,542,868, of which $1,592,372 is related to TIF projects, and $950,495 is the total unrestricted fund balance. Looking at the statements of revenues and expenditures, beginning on page 4 of each report, year to date, total revenue is $523,670 for the JCDA and $504,295 for the John Sevier Center. Expenses are at total expenses year to date are $514,251 for the JCDA and $438,519 for the John Sevier Center. And the net profit year to date is 9,429 for the JCDA and 65,736 for the John Sevier Center. If we compare the annual budget versus the actual figures, which is on the last part of the report, the budgeted revenues have been, expenses are at 48% of the annual budget for the, let's see, which one you have up. It may be, it'll be confusing because we're talking about the two different reports, but we can find a way to make it more clear next month. But expenses are at 48% of budget for the JCDA and 63% for the John Sevier. And I believe that John Sevier being above budget is because of the roofing project that we was all approved. And we will do a budget amendment to get the budgets back in line with the actual operations. Are there any questions?
All right, hearing no questions, do we have a motion for approval of both the Q1 and Q2 financials?
This is Shannon. I move to approve.
This is Tracy. I'll second.
All right, any further discussion? Lindsay, would you do the roll call, please?
Hank Carr,
Yes.
Shannon Castillo.
Yes.
Tracy Johnson,
Yes.
Brent Long,
Yes.
Freddie Malone,
Yes.
Aaron Murphy,
Yes.
Lindsay Nichols,
Yes.
William Roller,
Yes.
Seth Thomas,
Yes.
Robert Williams,
Yes.
and Joe Wise.
Yes.
Karen, thank you for your time today and for joining us and for all your help over the past few months.
Okay, thank you so much. One other thing I would just point out after looking at these when they were finished, if you go over 750,000 in revenue from the HAP assistance, which it does appear you are on target to do, you will have to have a full single audit in next year. So while I expect all of these things to be fixed, I would like for us to stay ahead of the game on that. So I will try to pay a little more attention to these quarterly ones as they come through, and as we prepare an engagement letter to do the audit, we will need to make sure that that's addressed sooner than later. So thank you.
Thank you. Next item, we'll move on to the John Sevier Task Force. We'll start with the operations. The report is in your. Okay.
I'm going to go ahead and leave the meeting if that's okay.
Yeah, thank you.
Thank you.
Thanks, Karen.
Regarding operations, the report is in your packet. I understand due to vacations, the committee did not meet in December. Jim, would you go over the financials, please?
Sorry, Brent. Actually, I covered all the financials that I had, the financial highlights I mixed in with the ones I just went through.
Okay, great.
So I don't want to take everybody's time going through them again, but if there's any questions, I'd be happy to answer.
If there are no questions, Hank, do you have anything to add?
My apologies. No, the staff has a adequate report in here to cover all the activities from last month. They did a great job of serving a meal in December and distributing gifts, and I think we're on track.
Great, thank you. We'll move on to Disposition Committee. I'll ask Robert to update us on the meeting we had with LHP yesterday. Robert?
Thanks, Brent. Yes, we had a wonderful call with LHP. Those that were on the call, staff members, Diana and Jim, board members, Brent, Lindsay and myself, and we also had Pete Peterson, city manager of the city of Johnson City, And then with LHP, we had Phil Lawson, he's the chair, founder of LHP. Alvin Nance, he's the CEO of development. Carrie Parker, she's the CEO of LHP Capital, along with Corey Shepard and Mike Rogers, who are staff members, one of which is the kind of construction manager. The other, I believe, is in their accounting and finance department. But it was a great call. They did have what I would call a preliminary presentation for us. And as I've stated before, this project is, the biggest challenge that they're facing and that anybody would face is that our subsidized rents through HUD for East Tennessee, the Tri-Cities area, are really low when you compare it to other parts of the country, even as close as Chattanooga and Knoxville. Just the subsidized rent is just, it makes it a challenge for this project. And so when you move a HUD property from an older existing building to new construction, you can't automatically increase the rates. And so if you think about building a new $20 million facility and having a $500 a month rent on it, it just makes it a challenge for these numbers to work. However, the good news is HUD will let you have a reduction in the number of units. So we could go from 150 units down to 145 units, but the rents would stay the same. The total rent would be the same. And so that gives you a little bit of bump in that funding gap. Also, there was some change in tax laws that allows the tax credits to be a full 4% or 10%. In the past, the laws state 4%, but they're really around 3% when they're it just that will help give us a little bump. In addition, in meeting the funding gap that they could face, there's some options with Federal Home Loan Bank financing, obviously tax credit financing, HUD financing. And my takeaway from the call is that we made the right decision in choosing LHP. They are a quality organization from top to bottom. They have spent a tremendous amount of time already on this project, and they really want to make this a viable project for Johnson City. They would like to come and present to the whole board, either at our next board meeting or maybe a meeting in March, or maybe it would be a called meeting. And our MOU is going to be running out here in the next week or so. And so what we would like to do as far as the disposition committee is to recommend extending that MOU with them for an additional 60 days. And I will try to answer any questions that anybody has, or if Brent or Lindsay or Diane or Jim want to add some additional comments.
Hey, this is Lindsay. I'll add a couple new comments. Basically, they gave us 3 different scenarios yesterday, 2 for new construction. One was redeveloping the existing building, which is obviously not an option since we want to redevelop and revitalize the Johnson Beer Center. But with both of the new construction scenarios, there was a significant gap in funding. And I believe if we drill down the numbers, that we can bridge this gap. Some of the numbers that they gave us, as far as like tax credit prices, those are significantly low for what the recent deals that I'm aware of have gone for. They're saying that maybe you get 90 cents a tax credit. I think it's more 94 to 96 cents on the most recent things. But I think that there's a lot of room to bridge the gap in the funding that they found based on their uses of their funds. You do get we need to figure out a way that we can get some funding to pay down our debt. So, you know, last night I looked up, in the state of Tennessee, you can get up to 15% development fees for the general partnership. And I believe that the options on the table for the JCDA to become a small percent of the general partnership in order to get some funding back. That's an option we could use. I'm not sure if we can do that. I don't know the specifics on that, but I know that if we look at development fees, which is 15% of the qualified application fund, and that obviously does not include land price, which we haven't even delved into at this point. I think that there's some room to bridge the gap as well as get some extra development fee funding. So I think that we're really on the right track. I think LHP is a fantastic company, and I think that they're going to be really easy to work with through this whole thing. I just think that we just need to wait and see where some land is, and we can't look at real numbers yet. So I just think we're really on the right track. The meeting was really good yesterday.
Yeah.
Great. Thank you both for sharing that information. Moving on to the Human Resources Committee.
Hey, Brent.
Yeah.
I don't know if this is a motion from the disposition committee or if I need to make it, but I'd like to make a motion on behalf of the disposition committee to extend the MOU with LHP for an additional 60 days.
I'll second that motion.
Brent, if you'll call for questions, and if there's no questions, we'll do a roll call.
Yes. Any further questions?
Brent, just one. I'm supportive, but remind me, are we paying them like a monthly fee or a retainer or something such that, I mean, there's really no added cost to this 60-day extension, is there?
No, there's not. It is just a friendly agreement, just a memorandum of understanding that we're only working with LHP at this point, and that we're not talking to another organization. That's really all it is. They just didn't want to continue to expend resources and then we go and work with somebody else.
Right. Is 60 days enough?
I think it is. They've spent a significant amount of time, and they really just wanted, when they presented the three options, they just wanted to make sure that they were going in the right direction. And I think we're all on the same page. And so I really foresee them coming within the next 30 to 45 days and presenting to us, to the full board. Any other questions?
Lindsay, will you give a roll call, please?
Hank Carr,
Yes.
Shannon Castillo,
Yes.
Tracy Johnson,
Yes.
Brent Long,
Yes.
Brady Malone,
Yes.
Aaron Murphy,
Yes.
Lindsay Nichols,
Yes.
William Roller,
Yes.
Seth Thomas,
Yes.
Robert Williams,
Yes.
and Joe Wise.
Yes.
Thank you, Lindsay. Moving on to the HR committee, we'll give an update on that. At our November meeting, last board meeting, Diana was asked to add additional places for the associate to self-evaluate and add an additional board member to be a part of the evaluation. As a reminder, this is a document that the city uses to review their managers. We've added additional places for self-evaluation, and it comes to you as a recommendation for approval. Are there any questions? Since this is coming as a recommendation from the committee, is there a second?
I'll second. This is Tracy.
All right, any further discussion? Hearing some background noise there. I'm not sure if someone's trying to add to the discussion or if maybe a microphone needs to be muted. No further discussion. Lindsay, would you do a roll call, please?
Yep. All righty. Hank Carr,
Yes.
Shannon Castillo, Shannon Castillo,
Yes, sorry.
Tracy Johnson,
Yes.
Brent Long,
Yes.
Freddie Malone,
Yes.
Aaron Murphy,
Yes.
Lindsay Nichols,
Yes.
William Roller,
Yes.
Seth Thomas,
Yes.
Robert Williams, and Joe Wise.
Yes.
I'll also add for the HR committee that we will be meeting over the next coming week to review the information that we've received on salary comparisons for executive directors. And we'll be presenting on that next month, as well as bringing back up the discussion of the interim status of the executive director. All right. Thank you all very much. As far as the chair report goes, I don't really have anything. We'll move on to staff reports. Would the staff like to bring us up to date on any other items they're working on?
I'll start out. You have our staff reports in the packet. I do want to point out that we have requested the county mayor make a new appointment to the TIF advisory board. And once that is in place, we will have a TIF advisory board meeting. I've also been supporting water and sewer along the Market Street construction over the last 2 weeks. They needed to reach out to some property owners. We really helped. We sent maps to property owners to let them know where, especially those that open onto Market Street that have clients coming in, to share a map of parking places with their clients and staff. Reiterated how they could get a permit at Northeast Gate. And then there's some absentee owners that the city needed to reach out to. So I've been able to help them make those contacts as well. Moving forward, we will, if you'll watch your email sometime next week, I will send out a doodle poll. You can give me your thoughts on extending our March meeting for maybe say 2 hours or adding in a workshop. I'd like to continue on our strategic planning. We want to take our mission and priorities that we developed in June and develop a 5-year plan. So I'll send a doodle poll out for dates if you want to meet at a separate time or if you want to extend your normal JCDA board meeting. We're also going to develop a survey. It's going to be very difficult, I know, to do strategic planning when we are doing it electronically. So I'm going to create a survey that will hopefully help us drill down some key measures to develop this 5-year plan that will allow the board to, create some measurable accomplishments. So be looking for that. You can let me know what you would prefer to meet, and then we'll put together a survey that we can use in our planning process. That's all that I have. Jim, if there's anything that you would like to share.
Diana, before we jump to
Yes,
Jim,
sir.
remind me who's on the TIF advisory committee, please.
TIF advisory for the JCDA is the board chair and Craig Torbett, Joe Wise, and John Hunter represent the city. County Commission has an opening, and then Tom Krieger represents the county.
Okay, thank you.
Yes, Diana, if you could scroll up to mine. I think everything in my report was already covered pretty well by the things that Karen said. I am working a lot on John Sevier though, and today in the transition to a new management company there. Today I'll be doing things like gathering contracts and vendor lists and things like that to make sure that we have everything covered for when we make the transition. And we have some insurance issues going on too. We have an insurance inspection from our best option there that will save us a lot of money if we pass inspection, and that's on the 19th of this month. So, you know, it's just the financials and the John Sevier transition, and that's what I'm working on.
Great, Lindsay.
I do have a brief update, something to add as well. I've been working on a year in review presentation, and this will be sent out to the board as well as city and county commissioners and the public as well. And I also plan to print it out and use it as a business recruitment tool. So some of the things that the year in review is going to hold is marketing growth, JCDA growth that we've done with TIF and John Sevier over the year, economic vitality in our district, buildings that were rehabbed, new businesses that opened up, and also some placemaking initiatives that we did throughout the year. I'm really proud of how it looks so far, and I can't wait to share it with everybody and share the things that the JCDA has accomplished this year, especially in a year full of COVID disasters. So I'm really looking forward to releasing that soon. We also have our intern program starting next week. So once they get here, we'll be able to jump in and start the next phase of marketing, why to start or move businesses downtown to help with the business recruitment tools as well. We've got a list of all the vacant spaces with building owners' names, contact info, leasing agents, everything that we need. So I'm excited to get that up and going.
Thank you.
Great.
And then just as a reminder, every month you will see, this is through the staff and Shannon and Tracy and I's work with Dave McCauley. You will see monthly priorities, and then the key items will be highlighted. And then every month there will be a progress report at the bottom. That's all for my report.
Thank you, Diana, and thank you for everyone for attending. I hope everybody has a great weekend. Nothing else, we'll stand adjourned.
Thank you.
Hey, everybody.